Welcome to the July 15th, 2019 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowan Group, and your financial weatherman. What a pleasure to be with you each week for a fast-paced tour, a graphic tour of the global markets and financial news combined with investment strategy that is unique to McGowan Group and NetWorthRadio.com. Look at this. It sets the stage for a July surprise. The first surprise in July? Well, 27,200 on the Dow for the first time in history. Multiple new highs this week. And we saw the same thing from the S&P 500, both the blue chip U.S. indexes. What was going on with these indexes? We're going to cover an important potential story at the end of July. We would say that the monkeys may be smoking hopium, and we're going to hold something shiny up for the Fed watching monkeys in this broadcast. One of the things that drives the value of stocks, of course, is earnings. S&P 500, so far so good. You can see the 2016 dip, the 5-year chart. This is how much money did the basket of S&P 500 companies make, and it topped 3,000 this week for the first time in history. Obviously, we're anticipating this nice part of the graph right here. But what about this? If we look at the most recent quarter, what we're seeing as we go into 2019 is actually a projected decline in this quarter's earnings as opposed to the rosy picture that you see here. It means we might be a minus 2% for second quarter 2019 earnings. And so we have had a decline in the trailing earnings. Let's go to the quarterly and see. This looks fine, but usually analysts are too optimistic in their forward earnings projections. Here we stand about to enter the second quarter earnings season, this being the future, of course. Notice how flat this is, but we've got a -2 projection for the July earnings announcements. What's that going to do? If the S&P earnings are actually down, well, July could have some surprises. The other surprise that we may see is the potential Fed rate cut or lack thereof. It's no secret that Trump's been beaten up on Fed Chairman Jerome Powell, saying you need to cut the rates back down. You raised them all last year. And the Fed probability that they'll actually cut rates at the July 31st meeting, well, it's an 80% probability that they'll take the short rates down by a quarter. The T-bill's already at 2.09%. So Jerome Powell could issue a surprise. This is something we're holding up for the hopium-smoking, Fed-watching monkeys. We're holding something shiny up here. What if Jerome Powell doesn't want to play the Trump card of a rate cut right now, complying with the White House wishes? What if he says, hey, the jobs report was great last month, we're not seeing a slowdown, we're not going to cut yet? You could have spider monkeys running for the door in both stocks and bonds. That's why we may be in a range-bound market, and that's a warning for July. What categories would we buy if we do get a setback? Well, we've raised some dry gunpowder, raised about 10 or 15% in most portfolios. Where would we go? Two categories I want to highlight. One, dividend companies called business development companies. They're like a bank that's not under the FDIC umbrella. They're a private bank. And whoa, look at this. It's been a big year for those companies, many of them way outperforming the S&P 500. This is also the Fed funds rate there. Lower rates tend to be good for that overall value, but they may have already over-anticipated. But this is also a dividend category that tends to be a juicy bargain in corrections for the right portfolios at the right time. Now we go to one other category, energy infrastructure. The extended interview, a research piece by Recurrent Investment Advisors down in Houston, the capital of energy infrastructure. Notice the pipeline graph, that's the colorful one, and a deference to UT grads, we've got burnt orange for oil prices. But look at this. We graphed this all the way back on about a 5-year chart, and we see oil at 27, oil at 100. 27 was back at the beginning of 16, and the appreciation in the pipelines has lagged while those companies are making more money than ever with U.S. energy independence and increased flows through the existing pipelines. If this category catches up to where oil prices are, they tend to be correlated over time, but energy infrastructure not dependent on price, dependent on flow. Those big dividends are actually being raised in many cases. And if it catches up, well, there's about 100% difference in appreciation potential in that energy space. I wanted to highlight those as two categories that we would be looking to deploy cash if all the spider monkeys run for the door when Chairman Powell may say he doesn't want to cut the rates. He'll just leave them where they are. That's a potential July surprise, and we want you to be prepared. Thank you for tuning in to YouTube McGowan Group. We will be back next week with the best in financial news and investment strategy. It's a pleasure to be your financial weatherman. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast-breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.